Hi everyone, today we'll be going over accounts October-November 2020, paper 3 question number 2. This is structure paper 3 which consists 6 questions each of 25 marks and we are also given a time limit of 3 hours. So we will be attempting to solve each question under 30 minutes. And this question number 2 is a part of section A which deals with financial accounting. Now without any further delay, let's get started. RX Sports is a sports club which provides sporting facilities and also sells running machines to its members. The treasurer prepared the financial statements for the club for the year ended 31st December 2019. And these included the following. So we're given the trading account for the year ended 31st December 2019, as well as the income and expenditure account for the year ended 31st December 2019. And the treasurer accidentally deleted the receipts and payments account from the computer before it could be printed off. However, the following information was available. Okay, so we're given additional information. Let's have a look at our first question. We need to prepare the receipts and payments account for the year ended 31st December 2019. Okay, let's do that. We're preparing our receipts and payment account for RX Sports. This is receipts and payments account. And this is for the year ended 31st December 2019. And we know that receipts and payments have two sides. So this is kind of like a ledger account. And on our debit side, we only include all of our receipts. And on our credit side, we only include all of our payments. Okay, let's have a look above to see if there was any opening balances. And receipts and payments account is essentially related to cash. So our opening balance would be that of cash, right? So let's have a look. We can see that cash and cash equivalents is given right here. And this had an amount of 1,420. So since this is a positive amount, this is our opening balance at 1st January 2019. And we will be recording this on our debit side or the receipt side since we are talking about assets. And our opening balances always are on the debit side for assets and credit for capital and liabilities. So that's balance brought down of 1,420. Okay. Then we are given subscriptions information. So first let's figure out the actual subscriptions that we received, right? Because subscriptions is something that RX Sports receives in favor for people becoming their members. So we are going to figure out our subscription. And the subscription actually received, I'm just going to denote it with the variable X. Okay. Then we adjust all of our subscription in advance and subscription in arrears for our opening as well as closing date in order to figure out the actual subscription received for this particular year to be included in our income and expenditure account, right? Which is right here. So we can just form an equation. Let's do that. Okay, I'm just going to write it right here. So we will be starting with our actual subscription received, which we would take from the receipts and payments account. Then we adjust all of our subscription in advance and subscription in arrears. So firstly, we have our subscription in advance, right? And the subscription in advance at 1st January 2019 means that this was actually paid at the year ended 31st December 2018. And if it was an advance at that particular date, then this definitely associated with the year 2019, right? Similarly, our advance at the date of 31st December 2019 means that this 600 is paid for the next year of 2020. And since we're talking about income and expenditure account for this particular year, we only record those incomes and expenditures relating to the year ended 31st December 2019. And this 200 is definitely associated with the year 2019, whereas this 600 is associated with the year 2020, meaning that this value of 200 should be included, whereas this value of 600 should be excluded. So we're just going to add the 200 and subtract the 600. Then we move to our arrears. So subscription in arrears means that this is yet to be paid. So if we're talking about our opening date, then this amount of 400 is the subscriptions yet to be paid for the year ended 31st December 2018. So this definitely relates to the year 2018. Whereas if we're talking about subscription in arrears for 31st December 2019, this is the subscription amount yet to be paid for the year 2019. So this value of 300 is associated with this year, which means that this should be included, whereas this value of 400 is associated with last year, which means this value should not be included. So that's subtraction. So minus 400 and plus 300 will result in the value of the subscriptions to be actually included in our income and expenditure account, which we already have as 14,200. Now we can easily figure out the value of the subscription to be included in our receipts and payments account. So that's x equals to 14,200. This comes here, becomes a negative, that's minus 200. This comes here, it becomes a positive, so that's plus 600. This 400 comes here, that's again a positive 400. And this 300 comes here, that's a negative 300. So this gives the subscription received to be included in the receipts and payments account to be 14,200 minus 200 plus 600 plus 400 minus 300, which results in the value of 14,700. And since the subscriptions are received, this is definitely included in our receipts section, which is the debit side. Let's write it down. We can write it as subscriptions, which amounted to 14,700. Let's have a look above. Then we're given trade receivables, and trade receivables is definitely associated with sales, right? So we definitely adjusted these values of trade receivables at the opening and closing date to our sales received from the receipts and payments account in order to figure out the value of the actual sales to be included in our trading section, right? So I'm just going to denote the sales value included in the receipts and payments section with the variable y, and then adjust these values in order to figure out the actual sales value to be included in the trading account. Okay, so I'm just going to form an equation right here. So this is the value of sales from our trading account, and then we are given the opening value of trade receivables, right? And this opening value of trade receivables actually relates to the sales made of last year, which is 2018. Whereas the trade receivables at 31st December 2019 relates to the sales made for this year. And since we're talking about trading account, we only include the sales made for this particular year, meaning that this sales or trade receivables of last year should be deducted, and this trade receivables of current year should be included. So let's subtract 5,200 and add 3,740. So that's minus 5,200 plus 3,740. And this actually results in the sales value to be included in trading account, which we already have as 14,800. So this gives the sales value in our receipts and payments account to be 14,800. This goes to the other side, becomes a positive, plus 5,200. This goes to the other side, becomes a negative, minus 3,740. Which gives our sales value or the trade receivables value to be included in our receipts and payments section to be 14,800 plus 5,200 minus 3,740, which results in the value of 16,260. And since we're talking about trade receivables, this is associated with sales value which we receive. So this should definitely go into our receipts side. Let's write it down under the heading of trade receivables. So that's trade receivables, which we figured out to be 16,260. Let's have a look above again. Then we're given trade payables, which is associated with purchases. And the purchases included in our receipts and payment section, I'm just going to denote it with the variable Z. And to this variable Z, we adjust our opening trade payables and closing trade payables in order to figure out the actual value of purchases to be included in the trading section. Okay, we'll start with the value of purchases in our receipts and payment section, which is Z. Then we adjust the opening and closing trade payables. So the opening trade payables is actually associated with the purchases made in last year, which is 2018. Whereas the closing trade payables is associated with the purchases made in this particular year, which is 2019. And since we're talking about our trading account, we only include the purchases made in this particular year of 2019, which means that this value of 1,560 should not be included, and this value of 2910 should be included. So let's subtract 1560 and add 2910. That's minus 1560 plus 2910, which gives the value of the purchases to be recorded in the trading account, which is given right here to be 9950. So this means that the value of the purchases included in the receipts and payments section is just going to be 9950. This goes to the other side, becomes a positive, so that's plus 1560. This goes to the other side and becomes a negative, so that's minus 2910, which gives the value of the purchases or trade payables to be included in our receipts and payments account to be 9950 plus 1560 minus 2910, which results in the value of 8600. And since we're talking about purchases, this is definitely an expense that we need to pay. So this is a payment which needs to be recorded on the credit side. We can record it under the heading of trade payables. So that's trade payables with the amount of 8600. All right. Then we have the net book value of computers. So we might be given additional information regarding it. This relates to club equipment, which you can skip for now. Then the club depreciates its computers at the rate of 25% per annum using reducing balance method, which means that this rate of 25% is actually applied to the net book value, and we are given the net book value at the opening date. Okay, let's have a look if there is any additional information. Then no club equipment was purchased during the year, but a new computer was bought and was paid for by check. So this purchase of new computer is definitely something that is to be recorded in our receipts and payment section, right? So I'm just going to denote it with the variable C. All right, now we need to figure out the value of C to include in our receipts and payment section. And what we know is that the club depreciates its computers at the rate of 25% per annum using reducing balance method. So we already have the net book value of 4800. And if we're talking about a new computer, then its cost is going to be the net book value, right? So we can just add C and then multiply it with 25% in order to get our depreciation for this year on computer, which we definitely include in our income and expenditure account, right? And we're given the depreciation on computers to be 1900, so this must equal 1900. So that's going to be 4800 plus C equals to 1900 by 0.25, and this is just 4800 plus C equals to 1900 by 0.25 is 7600. All right, then this gives the value of the new computer purchase to be 7600 minus 4800, which results in the value of 2800. So this is the cost of the new computer, and we were told that it was paid for by check, which means that this is a payment to be included in our receipts and payment section, and this is definitely something that goes towards our credit side. So let's write it down under the heading of computer. That's 2800. All right. Then for the second information, we are told that the club equipment which was disposed. So whenever we're talking about disposal, this definitely gets us something in return. So we are definitely receiving some cash in exchange for this disposed club equipment. And we are given that the original cost was 7200, accumulated depreciation was 3100. You can easily figure out the net book value. That's going to be the difference between cost and accumulated depreciation, which is 7200 minus 3100, which results in the value of 4100. This is the net book value. Then if there was a loss or profit, both of them would be recorded on our income and expenditure account. So let's have a look above. We're not given any loss, but we are given the profit on disposal of club equipment, which is 600. And we know that the profit happens when the sales value is greater than the net book value, right? So the disposed value minus the net book value is the profit, and we know that the profit is 600. We need to figure out the disposed value, but we already figured out our net book value, which was 4100. Now we can easily figure out our disposed value. That's just going to be 600 plus 4100, which results in the value of 4700. So this is the value that we got by disposing our club equipment. So this is definitely some cash that we received, right, which should be recorded on the receipt side of our receipts and payments account, which means that this value of 4,700 goes towards our debit side. So let's record it under the heading of disposal of club equipment. So that's disposal of club equipment, which we figure out to be 4,700. Okay. Then we have completed the first information, second information, third information, fourth information. Then for the fifth information, we are told that 1 month's rent was unpaid at the year end, but the rent shown in our income and expenditure account is the rent for this entire year, which means that we've only actually paid for 11 months, and those 11 months rent would be recorded in the payment section of our receipts and payments account, right? Because we only record our cash transactions and not the accrual concept in our receipts and payments account. So let's figure out 11 months rent. Okay, so the entire 1 year's rent is 6,000. So that's 12 months rent is 6,000. Then 1 month rent is 6,000 by 12. But we require 11 months rent because that is the time period for which we actually paid out the rent, right? So that's 11 months equals to 6,000 by 12 times 11. This is just unitary method, which gives the rent for 11 months to be 6,000 divided by 12 times 11, which results in the value of 5,500. So this is the actual rent to be recorded in the receipts and payment section. And since we're talking about rent, this is definitely a payment which should be recorded on the credit side. Let's do that. So that's going to be rent with the value 5,500. All right. Then for the sixth information, we're told that staff costs in the income and expenditure account included a provision for holiday pay of 160. So provision just means something that we haven't paid yet. And in our receipts and payments account, we only include those items that we have already paid for, meaning that our staff costs to be included in the receipts and payments section should not include this value of 160. So let's subtract this from the staff costs in our income and expenditure account, which is 9,800. So we just need to subtract 160, which gives the value of staff cost to be included in the receipts and payment section to be 9,800 minus 160, which is also in the value of 9,640. And since we're talking about staff cost, this is definitely a payment to be included on the credit side. Let's do that. We can write it under the heading of staff costs. And this had the value of 9,640. Okay, let's have a look above. Then we have our last information. All sales and purchases of running machines were made on a credit basis. Okay, this does not concern us. Then, okay, we have other costs. So since there is no information regarding other costs, we assume that this entire value is what we actually paid for. So this value of 1,320 should be recorded in our receipts and payment section. And since this is a cost, this definitely goes to our payment section of credit side. Let's write it down. That's other costs of 1,320. So this concludes everything. Now we just need to figure out our closing balance of our receipts and payments account, which is essentially the closing balance of our cash and cash equivalents. And in order to figure out the closing balance, we need to figure out the total first, which we can do by totaling the debit side. So that's the sum of these four amounts: 1,420 plus 14,700 plus 4,700 plus 16,260, which results in the value of 37,080. And the total is the same for the credit side as well. Now this closing balance acts as a balancing figure, and whenever we're trying to figure out the balancing figure, we just need to subtract all of these values from the total. In this case, that's going to be 37,080 minus 8,600 minus 2,800 minus 5,500 minus 9,640 minus 1,320, which results in the closing balance to have the value of 9,220. And this closing balance of cash will act as the opening balance in the next period, so we just need to include it as the opening balance. So that's balance brought down with the same value of closing balance, which is 9,220. Okay, this concludes our receipts and payments account as well as the first part of this question. Now we can move towards the second one. We were given the working section right here, so you guys should need to show all of your workings in this particular box rather than scribbling all over the question paper like I did. Now we need to say 3 reasons why the difference between the total receipts and total payments in a receipts and payments account may not equal the surplus or deficit in an income and expenditure account. So the very first reason is due to the fact that the income and expenditure account contains non-cash items such as accrual basis, whereas the receipts and payments account only include the cash items or the cash outflows as well as cash inflows. Let's write it down. Only the income and expenditure account contains non-cash items. And secondly, only the receipts and payments account contains capital items, right? Capital items is just the purchase of non-current assets. So if you can see here, we've included the purchase of computer in our receipts and payments account, but if we were to look at our income and expenditure account, we only include the depreciation on those assets rather than the total payment for the purchase of assets, right? So due to this reason, the surplus and deficit may not equal the closing balance on the receipts and payments account. Let's write it down. Only the receipts and payments account contains capital items. Then lastly, we can say that we have adjusted all of the prepayments or advance payments as well as the accruals or yet to be paid amounts in our income and expenditure account only, and those are not adjusted in our receipts and payments account. So let's write it down. Only the income and expenditure account contains items which have been adjusted for prepayments and accruals. And there is a difference between these two reasons because non-cash items basically means depreciation, whereas prepayments and accruals can exist for any other costs as well. Okay, then this concludes the second part of this question. Now we can move towards the third one. We are given additional information. The credit sales of running machines to members involve the members repaying their debt in installments. Okay, so they're repaying their debt in installments. And the managing committee of the club is considering making future sales only on a cash basis. Now for the third part of this question, we need to name the financial statement in which the write-off of an irrecoverable debt arising from the sale of a running machine to a club member would be recorded. So if we were talking about irrecoverable debt normally, then that would be recorded in the income statement, right? But since we're talking about a club, the income statement is equivalent of income and expenditure account. So that is where we would write off the irrecoverable debt arising from the sale of a running machine. That's income and expenditure account. And this concludes the third part of this question. Now we can move towards the fourth one. We now need to advise the committee whether or not future sales should only be made on a cash basis. We need to justify our answer, making reference to the effect of this change on the club's cash flow and its surplus deficit for the year. So let's talk about cash flow first. If we are only making cash sales, then that would mean that the money is received earlier, which would definitely improve our cash flows. Let's write it down. Making all sales on a cash basis would mean the money is received earlier, hence improving cash flow. Alright, and we know that cash flow for a club is basically their receipts and payments account. So let's have a look above. We can see that the opening balance was 1,420, whereas it has definitely increased to 9,220, right? So this increase might make it seem likely that there is no need to make change for credit sales to only make it on a cash basis in order to improve cash flow, because anyways, in the presence of credit sales as well, the cash flow has definitely increased. Let's write it down. There has been a considerable increase in the funds of the club during the year and therefore it seems likely that there is no need to make this change in order to improve cash flow. Alright, now we also need to refer to the effect of this change on our surplus and deficit. So since we're only providing cash sales and not credit sales, then that might make members to put off making purchases, which results in the fall of sales of the club. Let's write it down. Members might be put off making purchases and the sales of the club might fall. And let's have a look at our income and expenditure accounts to see if there was a surplus or deficit. Okay, we can see that there was a deficit for the year, which is essentially a loss, right? So if we are only allowing for cash sales, which could possibly result in low sales value, then this deficit can increase due to that particular reason, which is not a good thing for this club. Let's write it down. The club is already making a deficit, and this could be increased by the change. Okay, so now based on these factors, we need to advise the committee whether or not the future sales should only be made on a cash basis. So since we know that our cash flow currently has definitely increased, so there is no need to make it to a cash basis. But we know that allowing to make this on a cash basis would result in low sales, which would result in increased deficits. So that's not a good thing. So based on that particular reason, I would advise the committee to not make future sales only on a cash basis. Let's write it down. So our decision is that the committee should not make future sales only on a cash basis. Alright, so this concludes the fourth part of this question as well as this entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.